Hi, I'm Monica Young. I'm the broker of Just Global Inc. Today, I'm going to share with you the rental housing market outlook and the growth potential and headwind in 2024. Many people are concerned that we are running into a recession. In fact, with this global environment, with two wars going on, the Fed is going to increase rates to combat high inflation. Historically, 9 out of 12 times when the Federal Reserve tightening cycles, it almost always end up in recession, as you can see what the chart reflected. And how are we doing in the US economy? Basically, this year, we're projecting about 3.8% unemployment. And for next year, the unemployment may increase to about 4.4%. And currently projected in this year, the CPI is going to be 3.9%, whereas next year they think, the CPI will go down a bit. So it all depends on the current global situation with whether there would be continuous wars and also the trade wars going on. California, as you might have heard, we have like a negative population growth in the last few years, and it becomes stabilized and still at 39.5 million. And next year, we are expecting unemployment to go up from 4.6% to 5% next year. And in terms of housing, this is the first year that we've seen the median home price drop from 822,000 last year to 810,000 this year. So it's projected to be a negative growth, about 1.5%. And next year, if the interest rate would be adjusted downward, that's a chance that our median home price will go up again to 860,000. So as you might have heard, the affordability index in California is very low. So only 16% of the population are able to buy homes. And also you can see that like when during the recession and foreclosure time back in say 2009 to 2012, like almost like 55% of the people can afford to buy a home in California. Vacancy. So now vacancy rate is slightly above the pre-pandemic level. And this is the apartment we're talking about. And the vacancy index shows that during the pandemic time, we have a trough, like very low vacancy back in October 21. And now when we are in 2023, it's been capped at 6.4%. Supply in the California metro area, we're most concerned about, say, the South Bay, San Jose, Sunnyvale, and Santa Clara. And inventory units has been pretty low. And like in this 2023 quarter two and versus last year is only very slight change, only 1.2%. However, if we're talking about like the quarter two of 2022 to this year, so we have dropped about 40%, negative 40.3%. And whereas in San Francisco, Berkeley area is also has a significant drop of the delivered units for 13.9%. We're talking about apartment units. Rent growth. This is what most of our investor landlords concerned about. During 2021, the pandemic period, we did see some rent growth about 1.9%. However, the rent growth will continue to decelerate. So like this year, we target 0.5% negative, so it go down a bit. And being that a lot of people can work remote, some of people may be moving out of the expensive California area and working out of state when the rent is a bit lower. So the trend, the rent growth and vacancy rate by the metro area. Again, we most concerned about the South Bay, like San Jose, Sunnyvale, and those areas. We are expecting the vacancy to be about 5.3% for the quarter two, and then if we're talking about like year to year, there's about like say 1.1% difference. And also for San Francisco area, the vacancy rate also very high. We're talking about 7.1%. And more people now, they push to relocate, say, to the East Coast and other area, we see more vacancy unit in the San Francisco area. And in terms of rent and not paying rent, right now, as of September of this year, 9.8% of the people are not paying rent, versus what we can see during the pandemic time, almost like 21.9% people cannot catch up with rent. It has improved, and now also there's no rent moratorium, yet there's still, people not paying rent. And it depends from which county that the statistic may vary a bit. Investor share dips as the rent growth slows. So many of the units, say, you can see investment rental unit tends to be more for vacation and second home. But sometimes when the investor bought it, they can be buying it for flip versus they are buying it for rent. Like last year, 82% of the investment unit, people like to buy it and rent it out, versus this year's only 66% people are planning to rent it and 34% are planning to flip it. So the scenario changes as the market changes. Commercial property, that's a big one. A record amount of commercial mortgage is set to expire this year, pretty much throughout 2023. And smaller banks, they hold 80% of the commercial loan. And owner with a fixed mortgage, say we're talking about commercial mortgage, typically like 3 year, 5 year, or 10 years. And they would have like some adjustment as the holding period expire. So when they refinance, they have to pay a higher rate. And some borrowers may go into default. And in this case, the bank might have to mark down the value of those loans and try to sell it. And that would create some challenges for the banking system. Also, we're going to see like 4.4 trillion outstanding commercial and multifamily mortgages to be pretty much, have like issues coming up. So 16% of them will mature this year, and another 659 billion will mature next year. And among them, hotels, 34% have the biggest share in maturing this year, followed by office, which is 23%, multifamily 9%. So you can see that some of the bank-owned properties, such as the hotels, they are up for sale because when the owner see a very big loan amount because of the higher interest rate, and also with like a slowing down economy, the hotels are not as busy, then there might be a chance that those become bank-owned property. Rental market projection. So as you can see throughout the area, we're more interested in Northern California. And if we're talking about San Jose, you can see that rent growth is going to be about 0 to 1%, whereas in San Francisco, it's going to be negative 1%. And also another area like Sacramento, another major metropolis, is not going to have any significant growth, maybe at most 1%, and same for Oakland. And where is the vacancy rate? It would be around 3.5 to 4.5% in San Jose area, and San Francisco would be a bit higher, 5.5 to 6.5. So you can see that not very good news, not major rent growth, and also the vacancy rate will continue to be a bit higher than 2023. So I'm Monica Young. If you would like to discuss about potentials, if you want to say, instead of renting, if you want to sell your property and you want to discuss about the market, please feel free to contact us, and I can be reached is this phone number and also the email as in the cover note, and you will be able to see a PDF of this presentation. Thank you.